Hi Fools, I'm healthcare analyst David Williamson, and welcome to Market Checkup, the Motley Fool's healthcare focused investing show. Let's go right into today's winners and losers, and Furiex is our big winner today. How could it not be? It's up an amazing 145%. Yes folks, it is a classic instant biotech double. Now, its drug treats a form of irritable bowel syndrome that results in diarrhea. It passed its phase 3 trials. It soundly beat a placebo, especially at the higher dosing. There is currently one approved treatment, but it's only for women and has some other issues as well. This is a sizable market. I've seen it estimated as large as 28 million here in the US and EU combined. It's also a chronic condition, which makes for a pretty attractive user base. Some analysts have put ratings on the stock up in the $130 per share range, showing that there is still some good upside here in Furiex, but there is an active debate over how commercially large this market actually is for IBSD. Now, I expect approval for this drug. They are going to be filing for approval soon. There is a small handful of pancreatitis issues which are known for its class of drugs, so there'll likely be a label warning, but not an FDA rejection here. But Furiex is certainly one to watch going forward and to see how their adoption rate is and where they price this drug. Our second stock today is also a big winner. Gilead is up nearly 4%, which is a huge number considering the company's massive market cap. This is ahead of its earnings call, which will be after the market closes today. Baird is getting ahead of it with an upgrade for Gilead to an outperform and a price target of $103 per share. Now, Baird notes that Sovaldi, this is its hepatitis C drug, sofosbuvir, that we've been talking about for a while. Sovaldi is the trade name. The sales are absolutely crushing expectations and really any sort of historical marker as well. It looks to be on pace to be a first quarter blockbuster. Yes, that's over $1 billion in sales in the first 3 months. And that means it's going to approach $5 billion in year one sales. This is the peak number a lot of analysts were giving it. So we're going to see a lot of upgrades here as far as sales. Gilead is going to be just peppered during their conference call about what they think for Sovaldi's expectations through 2014. And that's not even to mention the Sovaldi and lead-iposfir combination that's going to happen as well. That data is coming out, sorry, FDA approval still remains for lead-iposfir, but you know, that will be the genotype 1 drug, and that will really be the biggest seller of all because it won't require interferon. Even AbbVie is up today on the news. This would be Gilead's biggest competitor once they get their drug approved, because the belief is that the market is so big given the strong uptake, there's more than enough to go around even if AbbVie's product ends up in second place. All right, so moving on to our big headline for the day, and Gilead Sovaldi news is pretty big, but Pfizer announced a successful phase 2 trial for its breast cancer drug palbociclib. Shares are up 2.5% on the news. Pfizer's press release was incredibly positive. Unfortunately, we didn't get a lot of data. Pfizer is likely holding that back for an industry conference, but I think the quote from Pfizer says it all. "We are delighted with the final data, which suggests the potential for palbociclib to transform the standard of care." Personally, I think this means that we're seeing an increased likelihood of Pfizer filing for an accelerated approval due to the unmet need and potential transformative power of palbociclib for treatment. That would be possibly as soon as March. We could find that out. And if that's the case, we could potentially see approval for palbo by the end of 2014, which would be very exciting. Now, Pfizer really is poised to dominate this breast cancer market. Novartis is running about 2 years behind Pfizer for its competing drug. Eli Lilly is still in phase 1 for its. So, you know, this would put estimates for palbociclib sales, you know, over $5 billion by 2020. I think that's a pretty safe estimate. I've seen estimates go significantly higher than that as well. And Pfizer could be testing palbociclib in other cancers as well. They've indicated that they've thought about that in everything you know, from solid tumors to various other forms. We should hear again more in March about accelerated approval, and stay tuned for April, where I think we'll see more of the complete data, including progression-free survival. The secret winner of all this, though, is Amgen, which actually gets royalties off palbociclib thanks to its purchase of Onyx Pharmaceuticals, which originally developed the drug and was licensed out by Pfizer. So Amgen should get a nice little royalty stream from this drug. All right, moving on to our watch list segment. And the thing I'm watching is the next big pharma breakup, and it looks like Novartis is on deck. There could be a potential reposition of assets or some asset sales, depending on what transpires. Now, reports are still lingering that Novartis is negotiating with Merck over sending its animal health business to Merck in return for Merck's over-the-counter business. This allows both to increase their focus on specific areas, especially it's especially important because I think it gives Merck better scale to compete against animal health giant Zoetis, which was spun out of Pfizer. It also allows Novartis to increase their focus on over-the-counter, even if it is a lower margin business. It is still, in their pharmaceutical realm. Now a rumor has come out, though, that Eli Lilly may be jumping in there as well, interested in increasing the size of its animal health unit and could bid on Novartis's division, which the price tag for which could be $4 billion, so that's not an insignificant asset. There are new rumors coming out that Novartis may think about actually selling off its vaccines unit instead of folding it into its pharmaceutical business. And that might be worth $1 billion on its own. Novartis has had a tough quarter. It missed estimates. Net income came in at just under $2.1 billion. Analysts were looking for $2.4 billion. Novartis also said its growth would be in the low to single digits for 2014. It's facing generic competition for two of its bigger blockbusters, Diovan and Gleevec, in the coming years. So, like many competitors, we're seeing it reorganize. It's already sold off its blood transfusion diagnostics business for $1.7 billion. Novartis' CEO said more was coming, so we will be watching here at Fool.com to see how Novartis repositions itself in this post-patent cliff world. Thanks for watching Market Checkup. Stay tuned to Fool.com for all your healthcare news, and Fool on.